So the problem with investing, like just like if you're in like a combat situation or really anything that's just stressful, is you don't want to be going into those situations without like a highly rigid systematic plan, because if you do, the minute there's any amount of stress, the likelihood that you're going to make a bad decision just keeps ratcheting up and up and up, especially as you see your stock going down, you know, your life savings is blowing up.
My guest today is Dr. Wesley Gray. After serving as a captain in the U.S. Marine Corps, Wes received a PhD in finance from the University of Chicago. He then worked as a finance professor at Drexel University. His research in how to make money in the stock market is cutting edge, and that led him to found Alpha Architect in 2010. Alpha Architect is an asset management firm dedicated to empowering investors through education. He's the co-author of 3 outstanding books on investing: Quantitative Value, Do-It-Yourself Financial Advisor, and Quantitative Momentum. I recently sat down with Wes and we talked about how he uses different investment strategies that are fully transparent, evidence-based, and systematic to produce outstanding returns, and how any investor can do the same. Wes, thanks so much for being on the show, man. I really was looking forward to this. I think since we spoke about last year and asked you about this coming on the show, and I'm glad we're all settled down and I get to spend some time with you.
Yeah, no, appreciate you having me, and look forward to chatting again.
Yeah, I think the last time we worked together on a project I think you did for us was about, I can't believe it was close to 12 or 11 years ago in 2010 or so.
No, and yeah, I remember right after that we hosted Richie.
Yeah,
we did the tour of the Wharton professors.
yeah, that was my son.
That was probably 8 years ago.
Yeah, my son Richie. Just to fill those in, my son Richie had a perfect score on the SAT in math. Brilliant guy, and that was the year of the Common App. Applied to all the Ivies. Totally dejected that he didn't make one Ivy. So I called my buddy Wes, who was teaching University at Drexel at the time, right? Drexel University, had all his buddies in Wharton. And I said, Richie, let's go see Wes, man. He'll set your head straight. And you set his head straight, which was great, which thanks so much.
I remember we talked to the profs, and you were asking them all kinds of realistic practitioner questions, and they couldn't address them. And I was like, I told you, just because you're a professor doesn't mean you know much.
Right. And those guys were all your Wharton buddies, right?
Yeah, there a lot of them are old Chicago PhD buddies, like classmates.
Yeah,
but they just got jobs there as professors. So
wow. All right, man. Time flies and goes on, and time is doing extremely well for you. When we first met, you were a professor at Drexel University teaching finance, and now you're managing 1.5 billion Alpha Architects. You're busting it up tremendously with all sorts of great research and do-it-yourself and helping average investors.
Yeah, we've been hooking and jabbing for over 10 years now, and 10-year overnight success, as they say. I still feel like I eat ramen noodles most of the time, but now we got $1.5 billion. To your point, it still doesn't even feel real when you mention it, but it is a fact, fortunately.
Yeah, all right, man, great. So let's go back to the beginning, because I really think that what you did and what you set out to do was so unique in the world of finance, where you set out from day one to use research to make it transparent and to make it so the average investor could get returns that eluded them, because Wall Street makes it complex and difficult and charges a whole bunch of fees. So let's start back to your University of Chicago days. You're there, you're getting a PhD in what, 04 or so?
Mm-hmm. Yeah, so I started there 2002, and then I was there through 2002, 2004, doing like the core, which is where you just study 16 hours a day and get beat up by the math champs. And then I obviously left because I joined the service, took a sabbatical, and then when I came back, I ended up finishing, I got back in 2008, so I went to the Marines, 2004 to 2008, came back, and then finished off 2008 to 2010. So 4 years total, but disjointed by a 4-year sabbatical in the Marines.
Obviously. How many PhD finance people from University of Chicago stop their dissertation, stop their PhD program, and join the Marines. I think you were a translator, Arabic translator, Marine intelligence.
Yeah. I was I did FID missions, foreign internal defense, where I'd been in bed with foreign militaries, one of which were the Iraqis. So, but also hung out Japanese, Filipino, you name it. As far as number of people that have done that, I imagine the number's pretty low, possibly one, but there's a lot of weirdos out there. So yeah, I'm sure someone else is probably back in the day. It happened all the time, in World War II time period,
Yeah.
like in the old school days. But new school days, I think I don't know of any, but I'm sure there's someone out there.
So what happened? 9/11 really impacted you a lot, and you're getting on with your life. You're a brilliant math student. You go to the top university in terms of finance, University of Chicago. For folks who don't know, Nobel Prize winner. I think Thaler,
Yeah,
was it?
Fama.
Yeah, Fama.
Yeah, he was my advisor.
Yeah,
Yep.
and Richard Thaler was also, wasn't he one of your?
Yep.
Yeah.
In the early times of my curriculum paper, yeah. So at the time they weren't that famous back then, but yeah, I had two people that would go on to win Nobel Prize.
Yeah.
Were helping me out there. When I entered back into the program, Thaler was too famous, and I don't know if he still interacted with PhD students, but Professor Fama, he's hardcore, and so he was on my dissertation committee.
Wow. So you went with the best, smart guy. You go to University of Chicago, want to learn finance. I remember the first time we spoke about 11 years ago. You were swapping papers, not swapping. You were sending me research papers, getting all excited about stuff with all sorts of crazy letters. And
Yeah.
Wes, I don't understand what this means. I don't even understand the abstract. So
Yeah.
it was really cool stuff. So you then decide that, hey, I want to take a break. I want to serve the nation. I want to serve my country. And what do? You just stop? You tell them you're taking a leave of absence?
No, well, so for me, I always wanted to do the service, and the problem is, like, originally I was going to do it after high school, but then I got into college, right? And then you're like, all right, well, I should probably go to college. And then I went through college, and I was a Wharton undergrad. And I immediately got into the Chicago PhD program, which usually doesn't happen. And you get these full ride scholarships where they basically pay you to go to school. And so I was like, well, I don't want to join the service now. Like, I've got to take advantage of this. And then I went into the Chicago PhD program. And then after a few years there, I just started thinking, I was like, okay, I need to either, do this or not do it. And I decided, hey, it's only going to get worse if I graduate from the University of Chicago with a PhD. The chances that I'm going to be able to say, okay, let's stop it all and join the service and do my time is going to be even harder. And so it was one of those things where I was just like, you know what, I just got to do this. And you have like a natural break in those programs where the first 2 years you're just doing the like normal studies, and then you reach what they call ABD, which is all but dissertation. And at that point, you're kind of on your own free will. And so that's what I did. I got to the first 2 years and I passed what they call your composite exams. And then I just thought it was a good time where, if I want to have no regrets situation, I just got to do it then. So that's why I had the weird, awkward timing of doing it in the middle of a PhD
But
program.
you didn't get some cushy job. You were over in Iraq, man. It was 160 degrees in the shade, and you were in full gear, interrogating. You were really right near the fighting, right near the tough stuff.
I wanted to. I mean, I was in the Marines active duty in combat, like, getting IED'd and shot at and hanging out with the Iraqis all day.
Wow.
But yeah, I wanted to serve, just like everyone else does. It was a great experience, honestly. Like a lot. The interesting thing is about the PhD program at Chicago. A lot of people don't know this, and I don't know if they specifically recruit, but as you're probably aware, like PhD programs are not really about your IQ. It's really about how much pain and anguish and focus do you have to survive, staring at the wall, thinking about one subject for a long time. So they recruit a lot of actually Israeli Defense Force folks out of there. So the funny thing is, I think most programs, if you said, oh, I'm going to join the service and go in the military, most of your classmates would be like, you're insane. What are you thinking? But in particular at that time, maybe it's just that time era, but like I'd say half of my classmates were former Israeli Defense Force soldiers, and then a few others were like Finnish snipers.
Mm.
And so when I told them I was joining the military, they're like, "Oh yeah, doesn't everyone do that
Right,
here?"
right,
I'm
right,
like, "Nah, man. Like in America, that's not like that. Like
right.
we don't all join the service." And so they all thought it was pretty normal and like what you should do, and which I thought was kind of unique because a lot of people wouldn't expect that. But when you're dealing with mostly internationals, I think I was one of two other Americans actually in the PhD program. They just come at it from a different perspective,
Yeah.
so it wasn't too surprising to them.
Yeah, it's great you're in that group of you're in that cohort that made all the sense in the world to you. So by the way,
Yeah, there was a lot of infantry officers, and they were actually giving me more advice about joining the military and getting prepped for the service than they were about doing regressions or quant analysis stuff.
right, right.
So it's kind of interesting.
So I want to talk about the books first, but before I do
Sure.
that, I just want to jump over. And when you built Alpha Architect, you have military people with you, right? You took that,
Yep.
you brought those folks with you. How many people you have in your firm that are from the military?
Yeah, so there's so my COO, Pat, he's a former Marine captain as well. A gentleman, Doug Puglisi, he's a former Navy pilot. And then actually one of our he's an older guy, he's an old Army officer. He's one of our backers and funders. So we have a lot of service members
Wow,
basically.
outstanding, man.
Yeah, a lot more than most finance firms, I would say.
Yeah.
So we used to be about 50%, but we keep growing faster than we can recruit, veterans at the moment. So I think we're probably down to 30 or 40% veteran, but we'll see how it goes as we move forward.
Just as an aside, before we get into it, when you hire veterans, it's a different mindset of people you're hiring, right? These people, they're disciplined. They know what order is. They understand the chain of command. They understand responsibility. Would you,
Yeah.
I just don't understand why more businesses don't hire as first, right off the top, military veterans.
Yeah, I think there's probably just a lot of communication issues with like translating like your skill sets and what you've done in the service to, being in the private sector. And then I think a lot of times people are I guess maybe worried or scared, like, how do I talk to this person? Like, is he crazy? Did he used to kill babies or whatever? And that's nothing against like civilians. It's actually against the veterans. Like they need to make civilians at ease and explain to them, I'm not crazy. I'm not a weirdo. Yes, my old job was kind of crazy. My mind is probably screwed up, but I am a normal person. I do normal things just like you. And so I think a lot of times there's just a cultural gap there that creates challenges for folks. But I think firms are getting a little bit better at it. There's a lot of groups out there in the charitable sector that help facilitate the communication gaps. So it's like anything. It's just, when you have bad communications and little cultural rifts, sometimes things don't match up as good as they probably should. But
Yeah.
we're getting there. We're working on it.
Yeah. All right, man. You're doing great on that end. That's really great. All right. So the first book, I remember you sent this to me around, when was this book? In 2010 or 11 or 12? Quantitative Value. When did that book come out?
Yeah, that one. Yeah, that was 2012. I think it officially got published.
2012. So I think you sent it to me at the beginning of 12 or 11. I don't remember. You sent me a manuscript. The book is Quantitative Value, A Practitioner's Guide to Automating Intelligent Investment and Eliminating Behavioral Errors. So you definitely didn't have marketing come up with a title for that, man. That had to be something you came up with. That's a mouthful.
Yeah. No, it's pretty terrible. And I can't even take credit for it. As you know, like when you publish books, like in the end, they'll take author input, but it's more like our way or the highway.
Right.
I think what Wiley's goal there was, because at the time I was a professor, and I think they make the most margin on, selling books into universities. So I think they wanted to sell it, and they did. They sold it as a textbook. So it wasn't going to be like,
right.
awesome stories and adventures in value investing land. It was going to be something geeky and boring that presumably they'd get professors and students to buy. So that's why they called it the mouthful.
All right,
title.
that's cool. That's cool. Sold a lot, did well. Okay, so here's the thing. You send this to me, I think 2000, as soon as a manuscript, And I remember reading it through. I think I read it in one. I think I stopped what I was doing that day in my office and just read it through the next 3-4 hours. And what I remember just jumped at me was something that many people don't speak about in investing, and that's the behavioral biases, how you are programmed to screw up, and how you,
Yes.
with the quantitative part is the systematic approach that we're going to talk about in a second, but you and your co-author, it was Toby Carlisle, right? Yeah, Tobias Carlisle, right?
Yeah, Toby. Yeah.
So you guys came up with an approach, but even if you don't look at the other stuff, let's put a second half of your book you don't even look at. The behavioral biases, you want to talk about that for just a minute because people just miss that totally, is first of all, how'd you come about the behavioral bias stuff and why did you spend so much time talking about it?
Well, unfortunately, I used to be a stock picker, hardcore, like Ben Graham, Warren Buffett style. Like I used to trade stocks in the PhD lab at University of Chicago there. And my original goal was to be like Warren Buffett type. And then I quickly realized through a lot of painful experiences that, I would like to be like them, but I'm also human and I have all these irrational problems and emotional decision-making issues. And so that was one thing going on. And then also at the time at University of Chicago, when I first started there was a gentleman there named Nick Barberas, who's now is a very famous professor at Yale. He was actually at Chicago at the time, and obviously Dick Thaler, where they were at the forefront of these ideas of behavioral finance and trying to emphasize to the efficient market team, hey, people are kind of crazy and they do all this weird stuff, and it does have effects on market prices. And just because you know about it doesn't mean you're immune to it. And so through that whole experience, I just got really interested in, because I, as an individual, investor myself, I everything they kept mentioning in the textbook, I was like, wait a second, that's my problem. Like I'm overconfident. I anchor on things. I frame on things.
Wes, let me interrupt you a second, man.
Yeah.
Just for those who are listening and don't have a background or PhD background like you do, explain for a second what a bias is, a behavioral bias.
Sure.
Give me one example, how it screws you up, and even if you know about it, it's still fighting you when you try to make money.
Yep. So, so one of the kind of like the high level concepts is they do all these studies on people like us, and you can present people with the same data, but you can do weird things to them and they'll come up with different decisions. So a rational decision would be, hey, there's a, hamburger over here from McDonald's and you're hungry. And there's a, piece of broccoli over here and you're also hungry. Now your rational brain should think, okay, McDonald's hamburger, it's going to give me a heart attack. It's, I'm going to have to run 20 miles to burn it off, or I should go eat my broccoli. In theory, the rational brain, if you're thinking sensibly about things, you say, okay, I'm not going to eat the McDonald's hamburger. I'm going to go eat the broccoli and like the lean steak or something like this, right? But so that's how you're supposed to think. But of course, your behavioral biases are kind of your innate tendencies or things that kind of happen at a subconscious level where you smell that McDonald's hamburger and, it starts like making you salivate and you're like, you know what, that broccoli, I understand intellectually that's the right decision that I should be doing rationally, but damn, that hamburger smells good, and you just jump on it and eat it, right? And so that's just a basic idea of like bias. Is sometimes we know we should do something because our rational brain says that's the right thing to do, but our irrational brain, or what Kahneman calls like a system one brain, it's kind of the brain that was developed when you're a monkey or a lizard brain. You're gonna do things that sometimes aren't optimal, right? And so humans, just like any other animal out there, like sometimes we do things that are not rational. And the problem is the more you amp up stress, the more you amp up like you're tired, you didn't have coffee, you just get even worse. That hamburger, your ability to go eat the broccoli versus eat that hamburger under stress, it's just even more difficult to make the right decision.
Right. So like
this happens in
for example, late night TV when they have those infomercials at 2 a.m, they know that your guard is really down. You're more relaxed, and you'll buy stupid things at 2 in the morning that when you
Yes.
wake up at 7 in the morning, you say, what the hell did I do?
Yep, you got it. And we all know this. Like, this is not something that's new to people. Like, we've all made bad decisions, and you usually make the worst decisions when you're under stress, you're drinking, you're tired, you haven't had your coffee, whatever it is, right? And so the problem with investing, like just like if you're in like a combat situation or really anything that's just stressful, is you don't want to be going into those situations without like a highly rigid systematic plan, because if you do, the minute there's any amount of stress, the likelihood that you're going to make a bad decision just keeps ratcheting up and up and up, especially as you see your stock going down, your life savings is blowing up. And so I kind of learned the hard way, I guess, through my own learned experience of being a stock picker. And then it's simultaneously getting lucky to have professors that were on kind of the forefront of this whole behavioral finance stuff. And then also, not only that, going through the military, where a lot of times in the military, they have standard operating procedures because, again, they don't want you to think too much, because they know if you're in like a stressful scenario, if you didn't have a good training or didn't have systems in place, you're always going to do the stupid thing. So it seemed logical after a lot of hard experience and problems in my own decision making, that if I was going to do investing, I need to get systems up front in place that I can build while I'm thinking rationally and sensibly, and then just follow those systems.
Right.
Because I didn't want my monkey brain.
Right. So what you did is you created a systematic approach that made sure that your caveman brain didn't go for that McDonald's hamburger, but leveled the playing field and said, okay, put all that aside, the fact that I'm hungry, the fact that it smells good and looks beautiful, put all aside, rationally, what's the next move I should make?
Yes, exactly. What does the evidence suggest? What makes sense from a high level financial economics perspective? What was I doing in my head anyways as a stock picker? But instead of repeating that in my head every time, why don't we just have a system do that?
Right.
And that was really the ethos of quantitative value is let's do value investing, but leverage computers and systems to make sure that process is the same every single time, regardless of how stressful I am, or regardless of how much the marketplace says, well, value investing is for old idiots that don't know what they're doing because cash doesn't matter anymore. It's all about revenue, or whatever people say nowadays. It's really hard to defend against these stories because our human brain is amiable to those stories. But the bottom line is we got to focus on the evidence. We got to focus on the systems and just deploy things that make sense systematically.
Right. Right.
And
so Buffett
almost be religious about it.
So Buffett said the most important thing for any investor is to have the proper temperament, to know how to deal when stocks are falling, not to panic. In fact, do the exact opposite and buy. And when everyone's euphoric, to do the exact opposite and look to sell. So he says it as second nature, but there's only one Buffett, and all the wannabes who think that they're going to go into a firefight and act like, a superhero like Captain Marvel. You're not going to do that. Your primitive brain is going to say, gunfire, the market's losing.
Yes.
I'm freaking out. I'm diving into a foxhole.
Yep, exactly. Buffett even says it like, investing is simple but not easy.
Right.
And what people don't recognize, like him and also like Charlie Munger, like Munger is basically a PhD in psychologist, in my opinion, even though he's not technically one. Because when you read those guys' reports, which I know you've probably read and memorized every single one of them, it's very clear that their superpower has nothing really to do with their investing IQ and prowess. It has to do with their discipline and ability to not worry and be affected by what most people get affected by. It's amazing. That is their superpower. Right. They are computers in a human body where I can't do that. You can't do that. 99.99% of the population does not have that superpower because they're a human being. And there's a non-zero probability that Charlie Munger and Warren Buffett might be robots, in my opinion.
Yeah.
The fact that they're over 90 and still like doing those annual meetings,
And they know they're getting,
makes me think that might be the case.
they're getting better. They're getting better.
Yeah,
Exactly. It's like, it's like a 40-year-old right-handed pitcher who's having a career year. You shouldn't have that. You should be sliding down. And these guys just get stronger.
They might be cyborgs.
Yeah,
that's my only explanation.
Gotta be.
They might be cyborgs.
Gotta be.
But most of us aren't cyborgs, so we need to kind of lean on systems.
Yeah,
it's like my view on it.
It's like casinos are built by not, every people who think they're card counters. Everyone walks in there and I could beat the house, but a small fraction can do that. The rest think they can do that. So you saw, see that what I liked about when I read your book the first time out is I said, very few books have ever dealt with both aspects, with isolating the problem, identifying the problem, and then creating an approach that basically took every single bias, put it aside, so you had no other choice but to act rationally. Is that more or less what you got there?
Yeah, that's right. Have a system that keeps you in the guardrails and makes you make the right decision approximately every time, as opposed to trying to be perfect and have influence from bias every time, which is at least I think it's suboptimal unless you're Warren Buffett.
Right. So what bias would you say is most people get sucked into when you've seen investors and you've dealt with them for a long while now?
The biggest one is overconfidence. Because naturally, like you ask people like, hey, are you a better driver than average? Are you better looking than average? 90% of people always think you're better than average.
Right.
But guess what? When we sample the population, on average, you can't be better than average, right? And the problem with it is, and you see it a lot in the marketplace right now, because I deal with 25-year-olds that tell me how great they are investing every single day because they've made 10,000%, is when you put a little bit of time and effort into something, even though there's a lot of noise associated with that decision, i.e. luck, but it works, your brain codifies that obviously as skill. And then if something doesn't work, your brain codifies that all the time as bad luck. It's called self-attribution bias. So if over time in all your decisions, anything that works, you codify as, oh God, I'm a genius. Anything that doesn't work, you blame it on some circumstance. Like, oh, the Fed did it, or the Democrats did it, or the Republicans did it, whatever it is, we've all made these excuses. Systematically over time, you're going to start believing in your own bullshit too much, right? And that's what it's almost just like a slow motion train wreck. And I can give you an example, even down here, these are not even young people. I live in Puerto Rico now, and there's a huge crypto community, and there's nothing against crypto. I think it's interesting, all that good stuff. But I was asking them, and they asked me what I did. And I was like, oh, I'm in the ETF business. They're like, what's that? I was like, we ever heard of Vanguard? They're like, no, what's Vanguard? And I was like, whoa, holy cow. They're like, is that like EFXs? And I was like, what's EFX? It's like some crypto index. And I was like, so what do you guys do? Do you just invest in crypto? They're like, yeah, we have diversified portfolios of like different crypto coins. I'm like, you have all your money in crypto coins? They're like, yeah, why wouldn't you? We just can diversify amongst a bunch of them. And it was just, I was like, my mind was exploding with just thoughts like, oh my God. But then it kind of made sense through the lens of behavior, because I thought, oh, these folks probably did this for the last 5, 6, 7 years. They've knocked it out of the park. Now they're like crypto. Well, obviously you'd invest in crypto because that's the best deal. And if you find the new ones, they always work. You get overconfident in it, and your brain and your focus just, you no longer can even see the scope of what's even out there. And you probably have a million observations on this too, but overconfidence is by far and away the most dangerous thing that I think humans naturally engage in, especially guys. That they're even worse. It seems like girls, like women, at least, they'll go talk to people to get like outside input, and that they're a little bit more rational. That's also what the literature suggests. But guys is we're like natural cavemen, like, oh, I'm stronger than you. And a little bit of success can sometimes be, the worst thing that ever happened to you. Because you actually think you know what you're doing.
What I found made me a better investor over the years, and I started on the floor, futures, near futures changed in 1983, is almost from the get-go, I was told to keep a book of mistakes. I didn't know what that
I
was, you
love
know?
it.
And now
Hmm.
it's about, I have like 6 or 7 notepads of these books. So I tell my subscribers to my newsletter, you know, someone says, well, I don't want a financial editor who makes mistakes. I go, you definitely want someone who makes mistakes because I identify what they were, and hopefully if
Yep.
I won't repeat them, and hopefully in the future, the mistakes become smaller. But
Yeah.
when I ask other friends of mine who manage hedge funds and investors and traders, what you have a book of mistakes, they look at me like I'm crazy. You know, it's like a gambler who only remembers the winners. And I find so much
Exactly.
with the losers, the mistakes where I just drop the ball, and you just find them. And
Yep.
shame on you if you do it again. But I'm totally on there with you, overconfidence, because when you do make it, it's all you. And when you lose it, man, it was never me. It was COVID. It was something else. It was an interest rate
Yep.
rise or something. So I guess as
Yeah.
humans, that's the way we naturally evolved. If we weren't overly confident, we'd still be in caves.
Yeah, no, for sure. And you see it in everything. Like it's also ties back to ego. Like a lot of people don't have natural humility because I think by nature you want to have an ego to like pump yourself up so you have the confidence to go do stuff. But you need to really kind of harness that ego back. And for me, I personally like to do like extreme exercise events because when you beat yourself down so hard, you're just happy to have water. Or I'm happy to have a piece of bread. And it's just you go back to like ground zero again. And I'm just like humbled. I'm like, man, I would just hope and pray to God I could have like a drip of water, like, let alone the Ferrari or something. And if people don't rebase themselves all the time, it's you really need to eat humble pie.
Right.
And in your life, somehow you always got to like do something to make you eat humble pie because it is so easy to just pump that ego up, get that overconfidence, and then actually think you're important in the world. And the reality is, we're like none of us are really that important. If you step back and think about it, I think there's 8 billion humans out there. So just from a rational perspective, the odds that you're that 1 in 8 billion
Yeah.
that's so special is probably pretty low. But that's not an easy thing for most people to contemplate, unfortunately.
Yeah, but I
But
want to clarify
mhm.
one thing, and just to people listening, I just want you to realize that Wes is an experienced professional investor, tons of knowledge, off the charts in IQ, and it's not being pessimistic, and it's not being confident in yourself or being positive. It basically is being even keeled to realize I can make mistakes. Here's what I need to look out for, and I'm not
Yeah.
invincible. And if you do happen to make money, it wasn't you. It was the approach that worked. And when you do lose
Yeah.
money, it was all you because I should not have been there.
Yeah, you got it. It's all about the process. It's not about the outcome because outcomes, as you mentioned, they're so noisy. And you've probably read like Annie Duke has a great book. I think it's
Poker.
called Thinking in
Yeah,
Bets,
yeah.
where it's just so important to think about that. Like, what is your process? Because that's something you can learn about, you can improve. You did this good, you did this bad. Okay, fine, we'll incorporate it in the process. But if you look at outcomes because of the noise, it's a terrible way to think about the world, and that's why the SEC and the regulators make you say past performance is no indication of future
Right.
results because past performance is not indication of future result. Your process is, and but that just confuses the heck out of a lot of folks. And it's not intuitive, but it's really important to think what is the process. An outcome matters, but only to the extent that it's tied to a process
Process,
that can
right.
be learned,
Right.
developed, and improved.
I think the worst thing that could happen to any investor or any gambler is to have a terrible process and have a very positive outcome. And it usually
Oh
happens
yeah,
on your first trade or your first bet. The
yep,
gods of investing or betting let you win that first one. So now you think you have a process that produces an outstanding outcome, and you spend the rest of
yes,
your money and your life trying to replicate that, and it's never so because the process sucked.
yeah. No, I mean that happened to me. Like I'll still remember. Like I bought Swisher Sweet cigar like back in like I don't even remember '98 or something. 3 months later, it was a classic Buffett stock, right? Really cheap, really high quality. I was like, oh, everyone uses it. They're addicted to it. I was smoking them in college, like the ghetto cheap cigars there. And it got bought out for like a 50% premium. And that was my first real pick. And I was like, God, this is so easy. And so I had that same problem, but I also got lucky in the sense that I had a huge win, thought I was a genius right in the early 2000s when value was a great trade. But then I also got humble pie really hard in 2008 when I didn't have a ton of money to lose because I was in the service for 4 years, thank God. So I had the benefit of a really big winner thinking I was awesome. And then I also had the luxury in some sense of being in the service. So I didn't make a lot of money because when I got out, I lost a shitload of money. And I was like able to rethink it and rebuild from a low base. And I feel like I got lucky because if I
Yeah.
kept winning,
It's all about
eventually I'd be,
it's all about
yeah,
timing. And if you started at the
yes,
wrong time, life would have been a whole lot. If you had a ton of money in '08 without those
yeah,
experiences, you would have lost it all, and you'd probably, I don't know,
yeah.
be selling
No,
paper.
exactly.
You know.
It's
All
yeah,
right.
and you're right. Timing is everything. I mean, hell, we're born today versus 100 years
Yeah.
ago. You can only imagine like what the difference would
But I
be.
want to tell you something, man. There's something that I think about and I use often, and it's something you told my son Richie when we met with you 10, 11 years ago, from your Marine days. You said, "Grow where you're planted." And I said,
Yeah,
"What the hell does that mean?" He goes, "Wherever you are, just make the best of what you got and deal with it." And I've thought about that
yeah,
so many times. Just grow where you're planted, and people walk around complaining and how life screwed me and this. Hey, dude, grow where you're planted.
yeah, yeah. No, I think it's a great thing. Like the Marine Corps obviously has like tons of life lessons because it is life amplified. And yeah, I mean, 'cause the same thing there. Like you just never know. Like they call it getting the green weenie. Like the Marine Corps, you may say, "I want to live here. I want to do this job," and they may say, "No, you're living in the opposite place. You're doing the opposite job. Get after it." And so the reality is, in the end, you got to take you have to take responsibility for your own actions and just make stuff happen and grow where you're planted. Because if you're just going to whine and complain about everything, I mean, that's fine. You're free to do that, but you're never going to actually like get any better or improve. And you're just going to be mad and pissed off all
Right,
the time.
right, right,
And I just don't know why
right.
people want to live like that
Yeah,
personally,
yeah,
but obviously a lot of people do,
yeah. No one
at
said it.
least
No one
as
said
evidence.
life. No one said life's supposed to be fair. It's not supposed to be a fair
Yeah,
game. It is what it is, and just deal with that. So, okay, so you're right.
yeah,
Quantitative investing, value
yeah,
investing, where you work out a fund. I won't even talk about what the form is because you could
yeah,
definitely buy the book. And folks, I just want to tell you
yeah,
something about what Wes writes. When Wes writes anything, he deals with a lot of research, totally transparent. So, in fact, you don't have to read them. All the footnotes to all the research papers, it's all evidence based. And it's nothing magical. It's nothing like on a Wednesday under a full moon in the month of July, buy pork bellies. Nothing like that. It's an approach that makes sense by companies that are trading at a certain quantitative valuation and have a certain financial aspect to them and buy a whole boatload of them and do it from there. That's really, I think, what was great about that first book and why I was so excited when you sent it to me. I said, "Wow, finally someone took both ends and put them together. The approach with why you screw up. And now if I could just, Charlie Munger said, just let me know where I'm going to die and this way I won't go there. If I could just avoid these biases, I'm going to be okay." And that's why I did the mistake book from the beginning. I said, I'm going to just overlook them. And this
yeah,
is tuition. I just paid
yeah.
tuition with my loss. How could I not learn something from that? And if I don't,
Nope.
I'm an idiot because I'm just going to keep making that same mistake again. So I definitely, that book, it's not for everybody, but if you're really serious about making money and looking at it, and it's not difficult, and because I'll tell you why at the end, keep listening, and I'll tell you how Wes put this all together in exchange traded funds. Second book that comes out, I think it was Do It Yourself, right? Do It
Yep.
Yourself,
Yeah. DIY financial advisor.
two financial advisors. Okay, now you come out with this book and you're basically telling the investing public what? Sum it up for me in a sentence.
So basically, just telling the investment public is we all got a family office, and you want to avoid fees, and taxes, and complexity. And it's not that hard in the end. Like you can DIY or do it yourself when it comes to financial advisory. And so we just wanted to, and that's not to say that everyone should DIY it because of the behavioral bias problems we're talking about. but I just wanted to write almost like a self-help book where to the extent someone wanted to DIY it and they wanted the frameworks and the tools and the understanding to be successful in that endeavor, at least there was kind of a cookbook for them to go with. In the end, though, like we have a lot of people that have read that book, but they read that book and they're like, actually, all the biases, all the things you're talking about here that I need to overcome in order to DIY it, I don't really want to DIY it. I still got to go hire someone because I'm so rational. I know that I'm going to be irrational, so I'm going to go hire someone. Like those are the people that are like the ultra rationals, where they actually are so cognizant of their own fragility that they know they need to hire someone, and those people are never going to have a problem. It's really the people on the other ends. They don't think they have a problem, or everything in between. But that's really what that book is about, just helping people know and have the confidence to be able to do this stuff themselves and avoid paying extra fees they probably don't need.
Right. And another thing I loved about that when you came out with that book, and I think you sent me the manuscript on that, or maybe I bought it, I don't remember exactly, because we have the same publisher, Wiley. In fact, did I introduce you to Wiley?
You might have.
Oh, okay, good.
Who knows?
I don't remember how you got involved with Wiley, because I remember what the odds were. Maybe I did. All right, no problem. Super.
Yeah. Bill Falloon is my guy. If you knew him, maybe I can't even remember. It's been so long.
A long time ago. All right. Maybe that's how I got a free book from you. Okay, so.
Yeah. Well, you definitely had a lot of great comments and amazing insights on that manuscript. So, I mean, regardless, even if you didn't introduce me, like that book's a heck of a lot better through your comments and everything.
Man,
for sure.
Appreciate that. I can't take any credit. You put it down on paper. I gave you my 1 year of Brooklyn College and my other 30 years of hardcore experience. I couldn't give you any PhD stuff. So I looked at it and said, this doesn't make any sense. This is perfect. So with the DIY book, what I really liked about that is you have in there, which is worth, once again, you put one thing in that makes it worth you don't have to read the rest of it. Just read this 1 or 2 chapters on it, which really set a light bulb off in my head. How a checklist, a systematic approach beats the experts, and you cite a meta study of all these things.
Yeah.
Go, please, just share with us the study that was done with wine selection of the great wine tasting, of grading them 96, 98, whatever it might be, and how wine tasters have such a perfect palate, and these experts know everything.
Yeah. So the long story short is you could take a very simple algorithm, and I don't remember the exact details offhand, but it's going to look at like the age of the grapes, where the grapes are made, and a few other things. And they're going to be better than all the best sommeliers in the entire world by a long shot, right? And that's just one study of hundreds of studies where psychologists have been doing this for a long time. It's like the model versus expert debate. And kind of the overall summary of this is not just in wine tasting, but in everything you can ever imagine. In general, you can usually build simple models that achieve the same outcome or better outcomes. I think it's 90 to 95% of the time. It's just the problem is experts are so seductive, right? Because they're like me. They got like PhDs, they got pedigrees from the best schools. So if I wanted to do the opposite role and be less transparent, more opaque, and kind of sell the snake oil, I could easily do that with my background. And a lot of people would believe me. They'd be like, oh yeah, this guy has to know what he's talking about, because look how many degrees he's got and all this stuff he's done. He must be amazing. But the reality is, unfortunately, I'm too transparent.
Not only transparent, to say, hey, you have too much integrity. That's really what it comes out to be.
Yeah, I know I'm full of shit, just like everyone else, because I put my pants on every day, like everyone else does, and so I don't want to portray just because I have a lot of background and experience that I somehow know something better than everyone else does. I just happen to be more cognizant of it and more aware. I'm just trying to present tools to folks, but you could see how the seduction of the expert, especially if the expert scares you, right? Because you're going into a field like finance or insurance or home buying, really anything where you don't know anything about it. And there's a big decision on the line. Like, God, I'm going to have to spend all this money, or, I'm going to have to get this lawyer. And if I don't do the right lawyer, I'll get screwed. And so when that expert says, listen, if you don't hire me, you could die. You could go bankrupt. Like, it's going to be ugly. All you got to do is just pay me a little fee and we'll get it taken care of. And most people, if they don't have like their cousin or their brothers, like a PhD in XYZ field, they're going to be like, geez, I should probably hire that expert. And so you can see how like experts can influence people that are uninformed to hire them, because it's scary to not have an expert with you on a lot of these journeys. You need a Sherpa.
Right.
And unfortunately, like a lot of times the marketplace in different industries exploit this to take advantage of a lot of people, where that's why there's a lot of fees for a lot of things that really just don't require that much knowledge. You just need a few tools to be successful.
And that's why Buffett says that, Wall Street's the only place where people with limousines go down to give their money to people who take the subway. It's just, you give it to a 25-year-old broker or advisor who basically shows you a nice deck, and here's a 50-year-old guy that made $1 million grinding it out, and he's giving his money to someone that has no idea, just because it's Wall Street builds up all this complexity. And it reminds me of the Wizard of Oz standing behind the curtain there, and just, I'm the great powerful Oz. And we found that time and time again, the simple S&P index fund charging 3 basis points knocks the hell out of 95% of all managers.
No, that's right. And we also learned time and time again that, like, to your point, like the emperor doesn't have any clothes. Like 2008, like, what are these guys doing? Well, it's called leverage, right? Or it's called like, and you see that everyone I know who's really, really rich, and is still rich, they're now diversified, because they at some point in their lives realize, like, oh, wow, I actually got really lucky. Like, maybe I had a good call, but in the end, the reason I'm a billionaire is because I got lucky. And you're only a billionaire if you realize that, because if you're a billionaire and you haven't realized that, eventually you're going to put 60-70% of your money all in on another bet. And it's going to come the crashing realization that, wait a second, you were actually a lucky individual and now you'll be broke. So most really wealthy people, they're still wealthy for a reason. They eventually realized it was all luck, most of it. And now they're like diversified, low cost, low complexity, keep taxes, like all the boring stuff that, Vanguard and a lot of folks been talking about their whole life, or Buffett does, it's just hard to get to that realization.
Yeah, all the years I managed money, and then starting a newsletter and writing really simple stuff. What do? We buy great businesses run by excellent CEOs with industry tailwinds, and we buy them at bargain prices. What else do you do? I go, that's all you need to do. It doesn't require any more sophistication than that. And they go, wow, I understand this. It has to. No, it doesn't have to be harder than that. And it seems to me that, the more complex you make something, the more you're playing on people's fears that A, they can't do it, B, that even if they try to do it, they're going to be met with utter failure, and C, don't even try. Don't even try, I think, is the worst part of it. Don't even try. And what I think you did is you brought out that you showed, and I think, which is so great, man, is you built up the reader's confidence to say, wait a second, these experts are no smarter than me. Here are the actual numbers. They underperformed a simple checklist. They underperformed a simple algorithm. So that's a big confidence builder.
Yeah. You really, people need to obviously invest time in their own education. And our firm mission is empower investors through education. We need to bring the horse to water, and eventually you got to drink the water. And you also got to be willing to walk up to it. And it is the case, and we have noticed this in our own history at this point, where when you're young and stupid and you start an impact mission business, you're like, oh, we'll put out all this great content, be super transparent, like really try to help people learn, understand, write books. Everyone's going to want to do this. And it still turns out to be the case that there's still humans like to be humans, and they'll go read all this material, and then they'll come back to us and say, like, Wes, why don't you do this? Why don't you do that? Why don't you make it 50 times more complex? As if I haven't already known and been down this rodeo 100 times. Like, and I always have to emphasize to people, like, the reason it's simple is because I've been thinking about this for like a lot longer than you have.
Right.
Like, do you not think I have not tried all the whiz bang mousetraps and crap that people talk about and add. Like, obviously I've been doing this for like 3 decades now. Like, it's simple for a reason, because it works better. Like, I'm not trying to sell you anything here. Like, you got to understand that, like, it's simple and transparent because it works better. That's why I put my own money in these things, right? If I thought complexity was useful and I got my own skin in the game, well, I would have done that.
Right.
But it's all the time. Like, people are so enamored with like complexity and making it fancier and like more hard and more complicated. And I just, well, actually, I do know why. Because I wrote a blog here. It's coming out tomorrow. There's an article in Nature that actually goes to this very thing, where what they do is they present people with like a Lego block, and they say, hey, you have 2 things. You can either add blocks to solve the problems, or you can take blocks away. And of course, all the humans need to do is remove one little block and the problem solved. But guess what? 90% plus of people in these studies, they add 3 or 4 blocks to, like, because people just want to add to solve problems. Like, people are very bad at like taking away things to solve a problem. And unfortunately, as you know, in investing in particular, simple is usually better than more complex. So our innate nature to always want to add to make things better is the worst in an investing context, where usually simple makes it better, because it usually keeps the cost down, keeps the trading down, keeps the taxes
Hey,
down.
look, also with variables, right? The more variables you have, the more complex it is, the more it's prone to error. And all you really need to do is 2 or 3 variables about a business, many times 1 or 2, to make a decision. And I know you've done all these studies. The more with handicappers, they did with horse handicappers. They said, okay, how many pieces of information? And they figured the more information they had, the more accurate and the more confident their picks would be. And in fact, the more information they had, the more confident they were, and their win rate continued to slide down.
Yeah.
So they kept winning less. It's just, it's winning by subtracting, and people just don't get it. And when by the way, when I write my newsletter, my monthly newsletter, we always isolate one company. And I always point to the 1 or 2 drivers of that business, that if I'm on a desert island, I'd want to know X. That's all you really need to know about a business. You don't need to know about the minutia of this or that. What drives it? How did they make their money? And if that screws up, what happens then? And people get so lost in the weeds. By the way, I have one analyst, I'm not going to mention who he is, but I gave him a timer, because he used to get lost in the weeds for hours looking up footnotes. So I gave him a timer, and I said, okay, when I ask you something, hit the timer. You have 20 minutes. You can't find it in 20 minutes, you're never finding it. Move on.
Doesn't count.
It doesn't matter. It doesn't matter. All right, let me go, because I want to finish up to the here, because I want to get to the end of this in terms of where you took all of this and you put it together in a basic one-stop shop. And that's when you created, with your partners, Alpha Architects. What was the goal of creating Alpha Architects, and what do you do?
Yeah, so we have an impact mission that is started even from the very first day, which is empower investors through education. So that's what we do as like a firm. Like, that's why we exist, what we're trying to do to the marketplace. But we obviously we're a for-profit business. And so what we do is we decided to embed all these systems and these books and these strategies that we have in our ETF products, because you can manage taxes there. And a lot of times they'll read the books, and we're more than happy to help people facilitate if they want to do it DIY. But as you know, like, a lot of times people they don't want to DIY. As long as it's affordable, they understand the process, what they're getting into, they would be willing to pay to somebody to do that on their behalf.
By the way, I like to think of that as like the IKEA model. You could buy something from IKEA, and there's no words in how to put it together. It's just 3 or 4 pictures. But there's a whole subculture of people out there who charge to put IKEA models and furniture and whatever together.
Yeah.
Even though it's DIY, I don't want to do it.
Yeah. And as long as you don't charge like too much for your services, it's affordably priced and all these.
It's a good deal. It's a good deal.
Yeah. Some people want to pay for your time and effort and you doing the work for them, right? There's a reason people buy stuff at Amazon. So what we try to do in general in the marketplace is we try to become like the vanguard of really weird boutique-y active strategies that aren't really scalable. and they're really hard to access at affordable cost. And Vanguard's not going to compete against us, right? Because the reality of the marketplace these days is if you're in big, scalable, I can put $100 billion into this thing. Guess what? Vanguard's already doing it because they have hundreds of billions of dollars.
Right.
But guess what else? I guess this is a good or a bad thing, but they can't do strategies that can only take like maybe $1 billion or $2 billion because that they don't even wake up for that much, right? And so there's always going to be opportunities for boutiques to do unique, weird stuff at the margins. And if we can deliver these affordably, efficiently, low fee, low taxes, and you find a segmented buyer, it could be valuable. Just
Right.
like there's Amazon out there, and then there's Shopify, right? Shopify hosts thousands of different stores that are all boutiques that are all successful because marketplace kind of has something for everyone, and the 800-pound gorillas can't possibly do everything because they are 800-pound gorillas and they can't really do the boutique-y weird stuff, which is where we tend to focus.
Right. So you created ETFs. There are about a handful, right? You have about 4 or 5 of them. That's it.
Yep.
Oh,
Yeah.
and
We do evergreen ideas. We're not a product shop. We have the same ETFs out there that do value, they do momentum, and then one that blends them. I put my capital in our own products, and that's just what we do.
you also have international exposure as well with the same process. You have
Yep.
so you have all that.
That's right. We have U.S. versions and U.S. versions. I personally am into global diversification, but as you probably know, like a lot of people have home bias where they're like, nope, I don't want to own international. I want to own 100% U.S. And that's fine. That's not what I personally do or recommend, but some people are like that. And that's why we have the strategies kind of bifurcated into U.S. international to be able to facilitate that.
Right, and anyone could buy or go to Alpha Architect or go online and check out. By the way, your website is a world of information, just all free stuff, videos. You have a whole bunch of PDFs. You are totally transparent in what you do and why it works and what your goal is and all. So you've done, and you charge it's something where it's not. If you have money, it's not an onerous amount of money that you're going to be paying in fees. You're doing an enormous amount of work. You're trying to beat the benchmarks, beat the indices, bringing that extra alpha, and doing it in a cost-efficient way, right? So it's a happy day.
Yeah, and we have fun too. So I'm not here to sell any of our investment products. Like we always tell folks, most products in the marketplace are sold, not bought. Like we don't even want that. Like our products need to be bought, not sold. So I'm not even going to mention the ticker. I just say, hey, go to our website and engage in the literature, engage in the process, engage in your own education, and then we just happen to offer products and strategies that I feel that someone who engaged in that kind of education maybe find interesting. But it's definitely not for everybody. And like I said, our main mission is empower through education. So even if you don't like any of our stuff, that's totally cool. At least you maybe can learn something and become a better investor. And that's really what our impact mission is. Because I'm a millennial, right? So I got to have an impact mission. Because we're pie in the sky thinkers. That's just what we do. So that's like our impact and try to help people out.
Wes, I'm telling you, man, it's just so I'm really just so happy for you to see where you started this idea. I was speaking to you in the beginning of it when you were still working with a family office, and you came up with those things. You took everything you put it in books, you wrote about it, you researched it, then you did something most academics never do, is you actually went out and did it, and continued success, man. You're doing a tremendous service for investors, and you're one of the very few people that I refer to their books often and look at your site, because you have all these research papers that keep coming out that I really enjoy, and you put a lot of effort into a lot of free stuff. So all the power to you. Just keep growing and get bigger and make a lot more money.
Yeah, no, appreciate it. And the only thing I will plug, because it also helps the marketplace, is we're now doing infrastructure for people that want to enter the ETF market. So, if anyone out there has got like a mutual fund or SMA account, like we're trying to create lower the infrastructure cost on launching ETFs. Because we've unfortunately ate those costs for a long time.
Right.
And so if anyone out there is interested in the ETF marketplace and you want to try to access that, that's another thing we're trying to leverage low cost tech and affordability to try to offer other people a chance to get into the ETF market.
Right.
Just because historically it's such a racket. Fortunately, we survived, to make it to here, but it's very challenging as a startup or like a new asset management company. And I don't even know if I would want to try to do this again if I look back 10
No,
years.
I just remember we're running a small fund, the amount of money we're spending on auditors and accounting and legal just to get a one piece of paper audit for something that was so simple was tens of thousands of dollars. And it was all in Schwab. It was nothing fancy. It was no complexity, no level 3 pricing. It was, it was,
I know.
God damn,
the cost of, it could be because obviously there is monopolistic competition in the ETF business and asset management in general. So obviously if you're BlackRock or Vanguard, you probably have a lot of incentives to like, hey, let's make it where everyone has to hire 50 lawyers and like burn all kinds of money on fire because they don't really want competition. So I'm sure there's an element of that goes on.
I don't know.
And so we're just trying to, we're almost like the insurgents in the business. We want to try to facilitate competition, and we know we're not the only ones with good ideas, but other people do too. So we're just trying to break that market open where boutiques and smaller players can access the broad marketplace without chopping their legs off to get there.
Yeah, beautiful, man.
At least that's the idea.
Yeah, great.
That's another business we're starting. Just because serendipitously we had to survive, and now we can offer that service to other people who can maybe lean on our experience and cost structure to enter the market a little bit cheaper.
Beautiful. So anyone out there wants to start an ETF, speak to us. You'll save a lot of money, and you'll probably be a lot happier with a lot less regulatory problems because learn on his mistakes. Wes, man, I want to thank you.
We still have to deal with them, but at least we'll deal with it and coach you through it.
Right. Wes, I want to thank you, and it's been way too long. Next time I'm down in Puerto Rico, I'm definitely stopping by you. And we have to catch up.
Happy to host.
It's been 10, 11 years since we've been, speaking, but I'm so glad to see how you've grown and how you've given so much to the investing community and how successful you've become. It's really just outstanding. I bet the most surprised person is your wife. So she, you really freaked her out, huh?
Yeah, exactly. She, I don't think she knew what she was getting into originally, but it all worked out for her. Sometimes you get lucky.
Yeah, another one of those lucky
married
things.
Down, but it works out a little bit,
Right, gotcha. All right, Wes.
I'm still way too ugly though.
Don't matter.
Probably upgraded on that front.
Doesn't matter. You're rich now. All right, folks.
Yeah, well, getting there.
Dr. Wes Gray, thanks so much for being on the show. I greatly appreciate it, man, and continued success to you.
Thank you, sir. Appreciate it, Charles.
Okay, man. Take care. Thanks for listening to this episode of The Charles Mizrahi Show. If you're a new listener, welcome. If you've been listening for a while, we're glad to have you back. Either way, we'd love to know what you think of the show. Please leave a review if you listen on Apple Podcasts. Reviews make it easier for others to find the show. You can also see the video of the interview on the Charles Mizrahi Show channel on YouTube.